And what I know about infinite banking and what you know about it is from using it, the use cases become truly infinite, right? So there's times where, I transitioned from working within a financial planning office, and my business partner and I at the time were working there as basically employees. I mean, like as much as we want to say we were not, we were. And we left and created our own thing. Well, that created a bridge for us. Like financially, lifestyle, we needed to lean on those cash values to help us with lifestyle expenses that we didn't have. I've used it to put down payments on lake houses, right? Like this is lifestyle things. But yeah, I've also used it in order to buy assets and to create income. I'll tell you the first experience of this, which is really interesting because most people would say, there's probably a time frame where this applies, right? And that's what most people, I think, that would maybe start to say, well, it may be, it works for Hannah because Hannah is like 21 years old. I know you're a little bit older than that, but I mean,
I'm 12, right?
Exactly. I mean, it works for her because she's got her life in front of her, right? Maybe it still works for Russ. I know he's in his late 40s, but still he's got 4 kids. And maybe there's some, but I'm 55, I'm 65. This doesn't apply to me.
Hello, Money Multipliers. Welcome back to another episode of the Money Multiplier podcast. I'm your host, Hannah Kesler, and we ask ourselves, do our dollars make sense? We are here at the start of June. So big PSA, my friends on the West Coast, I'm coming out to you, LA, California. I'll be out there on the 16th of June. I want to say it's the 16th. Yeah, the 16th through the 19th. I'm going to be out there speaking in Hollywood. So holler at me if you want to come out and join the event. We can have a coffee or grab a bite to eat together. I know a lot of you West Coast people, y'all be yelling at me because I'm not out there as frequently, but your girl lives over here in Florida, okay? I like my East Coast side. So that's in the books for this month. We got the LA event. I also have some travel coming up where my niece, she's going to be touring colleges up in Alabama. I'm going with her. We're going to go to Tuscaloosa, visiting Auburn and the University of Alabama. So that's going to be some fun and exciting stuff. And then we have a little trip as well up to Sonora Island, near Vancouver, Victoria Island, all of those islands around there. Never been, super excited. It's going to be a woodsy type of trip. So looking forward to it. And then y'all know Rachel Katz, she's going to be coming with me. But I'm looking forward to this episode. I have a special guest joining us. And the topic I really want to dive into, and we're going to go a little bit off the rails because I got some other stuff I want to ask our friend. But I want to get into the conversation and the topic of, at what point does infinite banking stop becoming useful? Because let's be real, there are 2 different sides of the spectrum. All right, even just last week, we got into this. But again, you will go and do your research and you'll go down different rabbit holes of YouTube University and talking with folks and other life insurance professionals and agents. And there's 2 opposing spectrums, and there's really nobody in the middle, which is kind of funny. And you got the one side where folks are raving fans of infinite banking. All right. You can throw myself into that category. Hey, I got 8 policies. This is 2nd generation to this concept. This is just what we do in our own life. But then you got the other side of the spectrum, the people who are buy term and invest the difference, or why are you doing that with boring guarantees and whole life? You should go get IUL because you're going to get greater returns within your IUL. So I really wanted to have the conversation of being the middleman again, and at what point does infinite banking stop becoming useful? So for today, I am bringing on Mr. Russ Morgan. Russ, I call him half of Wealth Without Wall Street. Y'all may have seen him in his podcast show. He co-hosts it with his good friend, Joey Murray. but Russ is a wealth of knowledge. Russ has actually, I remember hearing about Russ's name when I was like 12 and Pops was really getting deeper and deeper into the infinite banking concept. So Russ has been around the block for a long, long time. He's got his whole basketball team of kids and his spouse, and they're having a good time hanging out and just continuing to evolve and build the family empire. So without further ado, let me bring Mr. Russ Morgan on.
And thank you so much for having me on. This will be so much fun. I'm looking so forward to this.
I know. I'm excited for you to be here because my first initial question, like Russ, I know like when we started to hang around together, which was I started going to think tanks back in 2019, I think was the first one that I ever went to. And that's when we first met together. But you've known my father for a long, long time. Is that right?
I have, yeah. I actually went out to an event in Kansas. It was maybe 2010, and I think that was maybe my first introduction to your dad. And he and I have been a part of some small mastermind groups in the past, and have shared lots of conversation and iced tea together in many different countries as well. So,
No, that's fun. And you home right now, where are you located at for my
yeah.
listeners?
Yeah, well, you were saying that you're going to be taking your niece up to Alabama. So I'm in Birmingham, Alabama. I'm actually right between Auburn and Alabama. I love to say I graduated from the University of Alabama, Auburn. And, this is definitely in the state, that's a big thing. But my daughter has her and Joey, my business partner's daughter, they both have two vending machines actually over in the University of Tuscaloosa, two different locations, apartment complexes over there. So I'm grateful that they spend lots of money in those machines, and they're making, $500 to $1,000 every single month from them. So.
Yeah. Well, because you've even expanded. All right. When I started really diving deeper into your podcast show, y'all were doing your passive income reports. You guys are still doing your passive income reports to this day, right?
We have, yeah. June of 2020 is the first time we published our personal passive income to the world. We actually went to a podcasting like international event, and I met these two podcasters, and they were in a different space. Their passive income was really more affiliate revenue, but they were each sharing their personal passive income report every single month. I thought that was so cool, and that's what we talk about is like infinite banking is a means, it's not the end, right? So people always ask you and I, what do I do with the money? And for us, we were super interested in buying assets and trying to create this, passive income, even though we really didn't know a lot of what that was at the time. And as time went on, we started, lending it and buying some rental properties and some other things. But our podcast led us into a myriad of different ideas, and we wanted to figure out how to do that. And I don't want to be a thought leader. I want to be a results leader. So I heard these guys talking about how they were sharing their personal passive income with the world. I said, Joey, let's do the same thing. And so June of 2020, we published our first passive income report. It was like $2,500 a month. It was pretty meager, but it was, it was ours, and we've continued to grow it. And, we ebb and flow somewhere above 50,000 a month right now.
No, congrats. And you have started your whole journey within the infinite banking concept. When was the first time you heard about Nelson, and when's the first time that you started your first policy?
Yeah, I actually met Nelson Nash at an event in New Orleans, January of 2005. And at the time, I was an investment advisor and soon became a certified financial planner. And the first time I heard Nelson on stage, he talked about using whole life insurance, and immediately my ears closed, Hannah. I was like, this is dumb. Like, who in the world would use such a stupid product? Like, either you would not know anything else about investing, or maybe your grandma needed it, right? And so I actually heard Nelson speak at the same event every January, and I would have the same kind of visceral reaction to the idea because I was an expert in the financial markets at the time. And, I know you know what an expert is in financial markets. It is a rising market. And I was in a rising market. And it wasn't until 2008 where all of that stuff started falling apart, and my so-called expertise was being, shattered. And I went to that same event in January 2009 after this moment of really feeling broken and feeling like I've let down all of these people, right, that had been dependent upon me to help them with their finances. And Nelson gets back on stage and he says the same thing as he always says. At that time, though, I was ready to hear it. And I went to a little breakout session after that. I bought his book. I read his book, which is 85 pages, as you know, on the way back from this time. I was in Orlando, Florida, flying back to Birmingham. I finished the 85-page book on the flight. I turned the book over. On the back page, it has his cell phone number and his address. And Hannah, you know what his address was? It's still on the book today. Rocky Ridge Road, Birmingham, Alabama.
Yeah.
And I was like, you
He
gotta
lives
be
right
kidding
down the street from me.
You gotta be kidding me. Like I literally had seen him speak in 3 or 4 different states at that point, 4 or 5 different times. And it wasn't until that moment where I was ready. And so I got to talk to him and spend a lot of time with him. He mentored me for about 10 years before he passed. And I bought my first whole life policy that year in 2009.
Well, and now, remind me too, so you have 4 kiddos, right? 4 or 6?
I have 4. Yeah.
Okay, 4.
Yeah.
I knew it was a basketball team. I just didn't know how many.
Yeah, well, Joey has 5, so yeah, I get if I'm on the court with them, we can have a full 5-man team.
No, that's fun. That's fun. And so up to this point, you have been living this lifestyle. You're obviously doing more where, hey, you're using your policies for business expansion, I'm assuming, and more on the investment side. So just real quick, before we get in deeper into specifically infinite banking, right now, y'all are investing in commercial real estate, multifamily, if I remember correctly.
Hannah, we have invested in almost everything you can think of. A lot of things that we shouldn't have invested in, right? We would love to say that we did it for education purposes so that others could learn from our mistakes. We definitely we have what we call investor DNA. That's something that we identified with and basically connected personality assessments with different investments and the pros and cons to that. And I didn't know what that was early on, but my investor DNA, my personality is a very high I on the DISC scale, right? So I'm the extrovert, I'm spontaneous, I love the excitement, the reward of things. And Joey has a lot of that in him too. So what that means is that we jump in, right? Like we jump off the diving board really quickly without assessing how much water's in the pool. And so that's hurt us a few times, but also we've learned a lot of lessons. So we have invested in almost everything you can think of. I think we right now are maybe 16 different asset classes. We have 20 something different streams of income coming in, but real estate is one of those areas where it's such a broad term. We do have some investments within self-storage, within multifamily, within mobile home parks. Our biggest probably center around real estate, which is the most base, the OG of real estate, which is land. We buy and sell raw land and sell it on owner finance terms. So that's like a big one for us. But we also have ownerships in lots of small different businesses that we are completely passive in. And then we do a lot of private lending, very similar to you and your dad. So.
Yeah. And your kids, are you, okay, my brain wants to go this direction because being second generation with pops teaching us about this, like I remember 8 years old is when I really, really remember dad bringing around, okay, hey, I'm about to go buy this other piece of property. I'm about to go buy the snowmobile for the rental property up in Idaho, right? Like he would really bring us into these conversations. Are your kids actively involved in the conversations with your investing and with the family banking that y'all are doing?
As much as possible, I could do a better job of that. Just like anybody gets busy, you end up getting into doing a lot of the stuff yourself. But we took them years and years ago to our attorneys when we were out in Salt Lake, and we actually did a full day session that was broken up over 2 days, and we did skiing in the middle, so it wasn't all boring stuff, and that was kind of how we got them to do it. But we did basically family values, and we talked about what is our family's values, what do we value, experience, generosity, charity, right? Like some of these things that were really important to us as a family. And so having them involved with our attorneys as we were building out trust. But at the same time, as each one of them have multiple whole life policies on themselves, I show them the cash values, and we've been able to use those cash values with a handful of them to actually invest in different passive income opportunities. So my oldest, one of the first things we did with her is that we went and bought a couple different short-term rentals. And so she had her own insurance policy that she had done. And what we did is we took the cash flow and we bought a car with the cash flow so she could see the benefit of it. And then she took the rest and repaid it back as a policy loan.
Yes.
And so now I have a 16-year-old I mentioned a second ago. We've bought a number. We have 3 different vending locations. When I say vending, some people think the old, like, Coke machines or the wire spinning, when you press E7 and a Snickers bar comes out. Well, she's buying these like sophisticated AI coolers where you put your credit card on, no more cash, put your credit card on, you open the door and you pull off from the shelf anything you want, right? Like it could be a 12-ounce bag of beef jerky. It could be Kleenex, or those little Clearex, or what are the little wipes that the makeup wipes? I mean, or
Neutrogena, Neutrogena, Dad.
Neutrogena, that's right. That's what I was trying to come up with. So anyway, all of this stuff, and like instead of it like them having to keep pushing the buttons, no, they just put it to credit card. They open, they take the things off the shelf, and AI cameras read it, and it charges them. And so now she has this machine that she paid like $3,500 for, and it's grossing like $1,000 a month, each one of the machines. And so we have about a 50% net profit. So she's doing the P&L, she's doing the supply management. She's dealing, I mean, she was texting me today. She's dealing with the company who runs all of that stuff, having to change bank accounts. And so she now is getting experience in business and stuff that you had a chance to do, I know, early on, but most kids don't. And so it's super.
Hey, sorry to interrupt the episode here, but I want to take a quick break. If what you're hearing today has made you curious about infinite banking, how it works, I want you to go watch my free presentation. In it, I walk you through the same steps that my family took to pay off $984,000 of debt in 39 months, and how we've been able to recycle and recapture every single dollar since then. This isn't theory. This is real. I mean, this is what the wealthy have been using over 200 years to keep the money within the family. This is literally where banks, conventional banks, store a boatload of their dollars at. And it's the same process that we've helped thousands of families across the country put into action. So go to themoneymultiplier.com/presentation and see for yourself how you can start taking control of your money today. All right, let's get back into the episode. I know, and they don't. And that's my mission, honestly, y'all, and to all my listeners. Like, put me in, coach. If you know of colleges, high schools, they want free education when it comes to money, holler at your girl. I'm here. I'm continuing to travel around the country, speaking at all of these different real estate events. The one in LA is going to be a TV host maker, something that's so out of the norm of what I normally do, but it's going to be cool because I have been doing a lot of my TV segments and the interviews and stuff. But we just need more people going out there and spreading the message of how money actually works, because let's be real, there's maybe a reason that they don't want to tell us how money actually works, and just kind of keeping us tied to the system. So hey, and Russ, last question. Your oldest one is how old now?
She's 20. She'll be 21 this summer.
Beautiful. Okay. So with all of this, you have established since 05 your family banking system. And when I'm going to ask the question to you, have you ever thought of a time when infinite banking has become unuseful? It's not needed anymore.
For me personally, I wouldn't say I have, right? Because I have the gift of being involved in it, right? I think that there's a great video. I'm sure you've probably even shared it with your audience before, but I reference it a lot, that backwards bicycle video. And there's a quote in there that I think is important to our conversation. It is that knowledge does not equal understanding. And if you remember from the video, it was experience equals understanding. And I think a lot of the times where people come to the part of not understanding infinite banking and assuming that it doesn't fit, it's because they have head knowledge, right? They mathematically try to operate everything on a spreadsheet, and assume that life runs on the spreadsheet. And I know that there's a lot of analyticals on here, and I'm grateful for you, right? You help me and others do amazing things and think through stuff that we wouldn't do. But also, we know that you can't, as our mentor Nelson Nash would say, life doesn't happen in a vacuum, and that you're going to have to go through an environment, and that environment is going to test the spreadsheet. It's going to change the spreadsheet. There's things. The reason infinite banking is something that you and I know is because Nelson went through an environment in the early '80s where interest rates had spiked, real estate prices crashed. Right, he owed all of this money, and life, this external pressure was pushing down on him. Mathematically, early on, it all looked great. And there's some multifamily people right now that are going through that same thing, right? Everything mathematically looked good in 21 and 22, and they started buying and doing all this stuff. And then all of a sudden, interest rates doubled on them.
Yep.
And so now one of the most famous real estate investors out there that most people know, the bigger pockets, Brandon Turner.
I just saw that.
Yeah. I mean, he's got clients that just lost $15 million. And now he's being open and transparent. He's talking about it, but he's talking about the crash that no one saw coming.
Mm-hmm.
And my point is that a spreadsheet can't deal with some of these external things. And what I know about infinite banking and what you know about it is from using it, the use cases become truly infinite, right? So there's times where, I transition from working within a financial planning office, and my business partner and I at the time were working there as basically employees. I mean, like as much as we want to say we were not, we were, and we left and created our own thing. Well, that created a bridge for us, like financially, lifestyle. We needed to lean on those cash values to help us with lifestyle expenses that we didn't have. I've used it to put down payments on lake houses, right? Like this is lifestyle things. But yeah, I've also used it in order to buy assets and to create income. I'll tell you the first experience of this, which is really interesting, because most people would say, there's probably a time frame where this applies, right? And that's what most people, I think, that would maybe start to say, well, it maybe it works for Hannah because Hannah is like 21 years old. I know you're a little bit older than that, but I mean,
I'm 12, right?
Exactly. I mean, it works for her because she's got her life in front of her, right? Maybe it still works for Russ. I know he's in his late 40s, but still he's got 4 kids. And maybe there's some, but I'm 55. I'm 65. This doesn't apply to me. And the first use case for this I had this is the one I share all the time, but it's the greatest one. It's the impetus of infinite banking in my life and becoming your own banker. Well, Nelson Nash talks about you have to store your money somewhere, right? And what will the banks do with the money, Hannah?
They will go lend it out to you or to other people.
And make a profit off the balance, right? So I'm reading that section in the book. So December 28th, 2008, my wife opens her dental practice. Her and her business partner take out over $700,000 of loans in order to do the build out and buy all the equipment and all the working capital for their dental practice, right? Great timing in the economy.
Mm-hmm. Hey, but FYI though, that's when Dad started his first chiropractic office was 08.
So he knows. So if you reverse the clock back about 9 months, I am managing her father's money, right, as an investment advisor, CFP. And one of the stocks he owned was this stock of Bank of America. His father had died and handed him a 7-figure portfolio, mostly made up of Bank of America stock. And he was told never to sell it, right? And so he told me, hey, do whatever you want to, just put in an account. I just wanted you to know we're never selling this. Okay, no worries. Well, as a good investment advisor, I just put a stop loss on there at like 20% and like 30%. Which again, those were just like catastrophic black swan events for this stock. I mean, it never moved more than like a quarter of 1%. Well, 20% was an unheard of thing. Well, in early 2008, if you go back and look at stock prices, especially Bank of America and all the other financial institutions, they start diving. So this stock that had been riding right at $50 a share, Hannah, dies. And I triggered the first stop loss. Goes through 30%, triggers all of it. It all goes to cash. And there's a short period of time where I was not welcome at his house. And I say that sort of tongue in cheek, but I mean, he definitely was not happy because he assumed the stock's going to go right back to 50, right? And now you've sold the thing that my father had given me and told me never to sell.
Yeah.
Now, that stock continued to drop. It didn't come right back. It actually ended at a little over $3 a share. So I became a household favorite after that, right? Like I'd done a really good thing.
Yeah.
But here's the thing is that we sat for 9 months, 10 months with money just sitting in cash because both of us were terrified. We had no idea what to do with the money, right? Because everything's crashing. You don't want to go into the market because you don't want to experience it down again. Well, fast forward January of 2009, I hear Nelson Nash speak. I read that book. I'm sitting there. I read the quote that we just talked about. Money's got to reside somewhere. They're going to lend it out to somebody in order to make a profit. And I thought, my father-in-law's got all this cash from a Bank of America stock that is just sitting here. I know they're going to lend it out. And guess who the lender was for my wife's dental practice? Bank of America. And I was like, I'm seeing it. Where do you think they got the $700,000 to lend to them? From cash that was sitting in my father-in-law's account, right?
Yeah.
And I was like, well, why is it that he's earning 0 and they're earning 7 and I think it was 7.85%, if I remember right.
Yeah.
I was like, why don't we just take out the middleman here, put those two things together? And so that's what we did. We literally paid off the $700,000 loan, bought an insurance policy on my wife. So he was the owner. My wife was the insured. He was the beneficiary. And every single month, that $6,000 plus payment that they were making to Bank of America got turned to him. That was the start of the family banking system. And so when people say, well, it probably wouldn't work. Well, he was uninsurable. My mother-in-law was uninsurable, but my wife wasn't. They had an insurable interest in her. They needed to have money put to work. Now they had the safest place that they could put it because it's being paid back from a business entity that less than 1% failed ever.
Yeah.
And they, of course, they wanted to invest in her because they love her. So it was like the perfect scenarios for us. So there's an example of when some may think that it's a bad idea, but I can show you from personal experience how that then created just a series of different investments that my father-in-law was able to make. And even to this day now benefits as a result of that first policy system that was created.
That's right. Because you always have to go back to what problem is this actually solving for me? Like, you know this all the time. And probably like Russ, I don't know if you're still continuing to work with clients one-on-one all the time, or if you're just solely focused on the podcast show and pumping out education. But a lot of the times where the misinformation comes from, especially you and your background, is, well, hey, what is that rate of return that this asset is giving me? But instead of just focusing on the rates of return, we need to solely focus on what problem is this solving for me? And when you look at it through the lens of solving problems, the solution is very, very clear, because as we know, infinite banking is not just the end all be all. Okay. It's not about the rates of return, right? Even being a real estate investor, being a private lender, why would I go put my money in a boring guarantee, let's call it even 3% interest in my policy, when I could go make returns and give it to this borrower making no less than 12%? Why would I do that? And I really want the folks in my community to understand what is the problem that I'm trying to solve, and how does IBC fit into that problem of the solution of where I'm trying to go into this next level. So to me, in hearing that story, it solved the problem of having the control, having the liquidity, of having this money, not letting it go and dwindle down because of markets and those external factors I can't control or dictate. So then I can now use this money to be more secure. That's what people want. Like, Russ, there have been folks where they come to me after I get done on stage speaking, because that's mostly what I'm doing still to this day, is traveling around the country, doing my speaking events and different things. But people will come up to me in tears thinking and saying to me, Hannah, I have never heard about this before, but if I would have known about this, I would be in a totally different financial position today than I was 10 years ago or so, right? I mean, have you had those same experiences where it's just totally a pivotal, life-changing moment with you and your clients too?
Oh yeah. I mean, the thing that this helps people do, right? It gives them confidence. And I always say that investing is not hard. It's the decision making part that's hard. And people need a framework. They need an understanding. And most people operate busy lives, right? Most common thing you say, "How are you?" And most people's response is probably more likely to say,
Good.
"I'm I'm good," or "I'm busy," right? And busy means that we have successful careers, we have businesses that we're operating, we got lots of kids and activities they're involved in, or I'm traveling, I'm doing all these speaking things, I have all these things and I'm busy. And so what they do is they default to whatever the lowest common denominator item of financial education they have is, and that's putting money into qualified plans and what we call money traps, right? And letting that money just sit there. And they assume that, man, just because I'm living a good lifestyle, I'm earning a lot of money, I will be successful later. And then time goes by, and sometime in the early 40s is where I typically see this happening, is people start having this level of regret. They start looking back on their life and they go, man, I thought I was going to be further along than
Mhm.
I am right now. And and then they hear you speak and they go, oh, if I would have only known about that thing,
Mhm.
right? And so two things happened. I would say is that I remember Nelson Nash talking about this in his book. He wrote this book, in 2000, but most of it he's referencing happening in the early 80s. And I was like, Nelson was in his early 50s when he was writing this book, like when that time was happening there, like whenever this was really going on in his life. And that's when he got really serious. So, one, if you think it's too late, it's probably not,
No.
right? There's so many different applications of this, but yeah, it is. People want freedom. They want to spend more time with their family. They don't want to look back and go, man, I wish I would have done this thing, but they don't know what to do with money. So when you give them some frameworks, give them frame of references of how to where money should be stored, how it can then flow from that place to any other place, whether it's to buy an asset or pay off a debt. And then where does that cash flow go back to? You give them some confidence that the world just is not giving them, right? Like the
Mhm.
world's going to say, stick it in a checking account, stick it into this investment. Why? Because the banks want your money, and so does the institutions that are, you're buying stocks in. They need that money. They're never going to tell you to stop giving it to them. But when you put it into an insurance contract, as you know, especially with a mutual company, you are now a part of the business. You are part of the company. That cash value is yours to be able to be used. Now, you need to educate yourself on what to do with it. Don't be willy-nilly and just make dumb decisions like I did early on. But you, but also you have the ability now to start making decisions that can control your future, right? Like you can start dictating what the outcome can look like. And I think that that's one of the biggest benefits that we see in our clients is that they've passed the buck to someone else. They've abdicated the responsibility to someone else. And once they get a taste of what it's like and they really have confidence of knowing how to inspect what they expect when they put dollars to somewhere, yeah, they start having those tears. They start telling you about the stories of the things that they're doing now because they want to and not because they have to.
Yeah, and honestly, Russ, to that point, like I'm gonna do a big PSA for all my TMM members. Y'all, I understand that the implementation team, if you're a member of TMM and you have a policy with us, you are assigned your own implementation agent where every quarter for the life of the policy, they're checking in on you saying, hey, how's things going? Do we need to update your tools? Do we have big purchases coming up? Do we need to prep for maybe a tax bill that's coming due in October? And some of the times y'all take them for granted because I know it's a free service that we do for y'all, but you need to stay on top of what's going on within your financial life because if you to that point of the dollars and the money, if you continue to only care about returns and maximum returns within a portfolio and not understanding the benefits of keeping your capital somewhere where it's safe, it's protected, it's liquid, you are the only one who has the control over those monies, you're going to continue to consistently misunderstand the infinite banking concept and the message that Nelson Nash was really showing to us, which is you got to have the control. Your money has to be stored somewhere, just like how Russ was saying. And if you go back to reading Becoming Your Own Banker, you know that. So, Russ, really what I wanted to think about as you were talking, I was thinking about this too, because I have my strategies, if you will, or communication of how I'm explaining IBC to somebody that is new. To you, when you're talking with new folks who are getting introduced to infinite banking, are you really looking over like their net cash flow and seeing what they're keeping at the end of the month and redirecting those keeping dollars into policies? Or is it more strategic of, hey, you owe $9,000 in property taxes. Let's maybe use this policy just to pay your property taxes every year and then recycle and recapture some of that money. So how are you framing this conversation is my question to these newbies who are joining IBC.
Yeah, no, I love that. So one of the things that I heard this quote, I think it's James Clear, that says, you don't rise to the level of your goals, you fall to the level of your systems. And for a lot of people, we don't have systems in our life. And so then, that you've probably even heard the system that you use is the best system, right? Well, what happens when people have no systems? So one of the things that we instituted in our space is that we created this thing we call the passive income operating system. And it is a way to flow our money. It's a way to see where dollars are getting trapped, right? Because what you need to do in any successful thing is look for the constraints, figure out where the potholes are, the obstacles are, and figure out how to remove those. So when you're looking at this and you talked about how do I flow dollars to IBC, well, first you got to figure out where the money's stuck. And so I talk about the biggest money traps in the world are the qualified plans, 401ks, IRAs. And they'll say, well, why are those traps? And I say, well, because if you can't use them to buy an asset to produce a passive income or use them to pay off a debt to free up a monthly expense, then it's not getting you any closer to financial freedom. That's the definition of a money trap. And so we take the time to look through all of that, I'm sure just like your team does. And then we say, okay, how many of these dollars that are stuck over here and money sitting in checking accounts for us is trap money because it's lazy money. It's not doing anything for you. Because if it's in a checking account that you can use, how oftentimes have you saved $1, put it in a checking account, and all of a sudden look around and go, man, I've been looking at this car, I've been looking at this trip, this new dress, whatever your thing is, and it's easily taken, right? So we call it that's money that's there is rat race. So how much money do you really want to keep in the rat race as compared to how much do you want to use to help you become financially free? And so for us, that's the first conversation. We're helping people, change the way that they think about money because they've not been what's been taught to them has been poorly taught. Most likely, it's been passed down from others who didn't know a whole lot about money. And so that's a big thing. So people, are taking income minus expenses and they're moving that over, but they're also starting to say, hey, we got money stuck and I don't want it to be stuck anymore. So maybe some of that money can be unstuck and put into IBC. But then they have to learn how to become a better investor. They have to learn what to do with the money because just because they have access to it doesn't make them any better. They could easily spend it from there or lose it, right? Yeah. And we see people doing that. So for us, how do we fund IBC? It starts with getting them, one, unstuck with their money, and then two, teaching them, if you have it here, what would you do with it? And it's an education process. It takes time. And it doesn't happen overnight, which unfortunately, in the society of the GLP-1, like I want to lose weight today, I want to become financially free today, it's hard. But, you got to choose your heart.
You know. And honestly, to that point too, because like just circulating on the topic of, hey, does infinite banking ever stop becoming useful? I know my honest opinion is no. But again, I understand I can come from a biased view, but I mean, hey, I just eat, live, and breathe this stuff. This is just actively what I do in my own life. But even to the point, because Russ, let's just say, wealthy individuals, okay? Even wealthy folks always need a place to store their capital. They want to protect their capital. And again, they just don't want to be limited to what they can use the monies for. But then it also trickles into, you kind of get to this point within your wealth building journey of, all right, I'm secure. I even get to that point where I reach my freedom number because Russ over here, we don't believe in retirement. Retirement's not in the Bible. Okay. But you get to that point of your freedom number where the passive dollars are coming in that rise and exceed your expenses. And so, hey, I can leave the 9 to 5. I can leave my W-2. I can just have those monies that are out there working for me coming in and fulfilling my lifestyle. But then you start to get into the whole conversation of charitable giving, right? How can I go and give back, whether it's to churches or dog rescues or what was that one hospital, St. Jude's, and the children's hospital and their whole mission, right? And then it kind of gets deeper into the estate planning and then taxes and the whole tax world. So just real quick, because I've been following your journey with you and Joey, y'all have even been getting deeper into taxes and minimizing the tax liability. So if I can ask, just for my own selfishness, is this through the real estate investing using like cost segregation, depreciation? Obviously, IBC, we have tax efficiencies within the policy with tax-free growth, even utilizing the policies for tax-free income during retirement. And may I also add the death benefit being tax-free. But is that your journey that you're really going down, is utilizing real estate to minimize tax liabilities?
Well, here's what the thing I will tell you. One, I'm not a tax professional, so don't take any of this as advice. Just as
This is all tax advice, my people.
this is just one beggar looking for the bread and trying to show others where they're finding it too. So this is from my perspective. I don't believe that there's a one size fits all for anything, right? And so from a tax perspective, yes, the more active income we have, right, the more the government, Uncle Sam, Uncle Sugar, is one of my friends likes to call him, comes looking. Yeah. And so we're always trying to look for things. So I did a talk a couple months back, and I talked about the 5 basic ways that every person should consider looking into, right? And doesn't mean you should do them, doesn't mean it's right for you. One of them specifically for those of us who are doing infinite banking. So I'll put that one last, but I'll go quickly. So one is kids, right? Kids, if you have kids, there's such amazing ways the government has given us the ability to have our kids, or anyone who makes under a certain income range, to be paid and not have to pay federal income taxes. And so one of the things that we've did with all our 4 kids is that we found a way, just like you have in the business and your brother in the business, to be able to go to work and do something that that your parents can pay you for. It's a great way for you to have pride in learning how to earn money. But also, kids also have lots of expenses. You got soccer, you got swimming, you got jujitsu, all of these different activities. Well, who would you rather pay for them? A parent that's going to have to earn $1, pay 40 cents on the dollar for taxes, and then turn around and go spend it, or take the dollar that you earn, pay it as an expense to your kid, so you don't have to pay the 40%. The kid then, if it stays under a certain amount, doesn't have to pay the income on it. And then they buy the thing that they want. So now you're teaching them what to do with the money. So that's a really easy thing. And for me with 4 kids, that's about $50,000 a year that I can move to them, and I can use that $50,000 to buy $75,000, $80,000 worth of goods that I would have had to make an income if I would have paid it out of my own pocket and pay the taxes and pay for it. So that's a really easy one. The little trick here that most people miss is that they pay it usually out of an S corporation or some business entity, and they end up having to pay all the payroll tax and self-employment tax. Well, just use a disregarded entity, and now there is no payroll tax and all of the self-employment tax for that. So that's a little hack that I learned. Another one, if you look on your tax return, they're numbered, right? Go down to line 23. Line 23 is what we call the learning box. And that's a nice way to say it. I think my CFO group calls it the dummy box or the stupid tax. But if you go to that, and on line 23 of your tax return, of your 1040, and you see that there's dollars in there, there's a reason why they're there, and there's probably a reason why they don't have to be there. And because this is usually where money gets stuck that didn't have a way it could be written off. So people who have a little side business but haven't set up an entity, and so it goes there, and they end up paying all the self-employment tax and other stuff. So that's a really easy one for most people to go look at on your tax return today, and you might be able to find some dollars. Go ask your accountant of like, hey, why do I have $14,000 on this box? What is it that we could have potentially done to offset that? Another one is dwelling unit rental. I think I've even had your dad at, we've done a mastermind at our house. I know at our lake house, we recently did some of this stuff where we would have events there. We'd be able to use our house and pay the expense to the house to host this event, and be able to ultimately be able to move a lot of money that my business would have had to pay income tax on, that it didn't to me personally. And as an expense, And then, the government gives us this benefit of not having to pick up income tax on rental properties if it stays within a certain number of days. So that's
different. That's different than the Augusta rule.
It is the Augusta rule. Yeah. The Augusta rule
okay.
is just a term used for that. There's actually a code section that you can do. The key thing is that you need to have lots of things in place. One of the hacks I tell people is that go get an MAIA, like commercial appraiser, to actually do an assessment of what your house could rent for, not as like a rental property on Airbnb or VRBO, but compare it to what other places rent for event venues that are surrounding you. Think like wedding venues around you, or commercial spaces where if you went and rent a conference room or multiple conference rooms or swimming pool or whatever would it be, what would they rent? And those are usually for 4 hours. So like you have a 2-day event there, right? You get where I'm going there.
Yeah.
Another one is QBI deduction. And this is probably one where most people are knocking this out of the park, but some people really, unfortunately, they end up using CPAs forever. And at first they were probably the right CPA for them, but as time went on, they outgrew their CPA, where they were making 4, 5, 10x what their CPA makes. And the CPA is just not really equipped to keep up with them. Not that they're not smart enough, but their average client is not like you. And if that's you, one of the things that I learned in the QBI to help you just understand this, if you go to line 13 on the 1040 and you divide it by line 8, that number should be about 20%. So if that number is not 20%, right, or very close to it, right, meaning if it says 5%, then you should go to your accountant and ask why. Well, because the government gives us this deduction to write off 20% of our qualified business income. That's what that is for small business owners. And so if you're a small business owner and you take line 13 and divide by line 8, and it's like 6 or 7%, there might be something you could do. That you may be leaving dollars on the table. Last one I'll give you for the infinite bankers out there, and I learned this one the hard way, right, is this thing called investment interest expense. And I actually did not realize that every time I was giving my CPA all of my interest statements for everything, right, from mortgage interest all the way down to the interest on policy loans, that I assumed that they were writing that off against income. But they don't know intuitively what to write it off against. And so when I pulled up this investment interest expense deduction on my tax return, there's actually a form 4952, and it showed me this carryover expense. And Hannah had over almost $150,000 of investment interest expense carryover. What that means is I paid $150,000 investment interest expense, but they didn't have investment interest income to write it off against that they knew of. But I was like, what are you talking about? My whole business, my whole world is I'm taking policy loans for the purposes of either buying assets or investing in my business, either which are investable expenses that I could have written that income against or that expense against. But yet I had not specifically told them what I did, so they didn't do it. And so by catching that, so I went, and you can do this on, I think it's function 8 or function F or whatever on your keyboard, and it will, like, you can type in carryover. You can go look for this and see, do you have investment interest expense carryover, especially if you're an infinite banker and you've been doing this. Now you need to figure out a way to get that investment interest expense and be able to offset it against other income. So I was able to fix that a year ago, and that was a huge write-off for me to finally catch up all of this interest that I paid that should have been a write-off a long time ago if I would have just been smarter and been able to communicate. So those are just 5 off the top of the cuff things that may not fit you. Again, I'm not telling you to do these things. I'm just telling you what I did.
Yeah. No. But to that point of even like within the infinite banking space, to taxes, I have been having to go do my own due diligence on my own taxes, which my community knows this, but Tax-Free Wealth by Tom Wheelwright changed my life. I'm like, I had no idea. And none of my people are telling me this. And you have to go kiss a few frogs to figure out who is the right person for you. But you got to do your own due diligence, because nobody's going to care more about your financial life than what you do. And so you need to be the captain of the ship, if you will, or the commander, and just ask the questions. Here's the biggest piece of feedback. Like my mama would always say, she goes, Hannah, if you don't understand the answer to the question that you just asked, you continue to ask more questions until you understand. And that has totally taken me very, very far within life, especially when it comes to my money. underwriting deals, even like within real estate and just even my tax situation. Cause I'm a newbie. Okay. I'm a newbie on the tax side. I'm trying to figure it out. And I continue to learn more and more as time goes on. But kind of circulating all the way back to just specifically the infinite banking concept, there's different evolutions to this. Like I've talked about the 4 stages of infinite banking on my live stream, which FYI, my podcast listeners, every Thursday morning, I do go live for Money Mornings with Hannah at 9 a.m. Eastern time. So come back to the YouTube channel or on Facebook, Instagram, you'll see the live being broadcasted at 9 a.m. or you can catch the replays on YouTube. But I gotten deeper into like the 4 stages, but there's also like the stages of, okay, how do I use this for the early years of IBC? I'm building my foundation. I'm building emergency liquidity. I'm creating discipline when it comes to my mindset. And truly, when does infinite banking stop becoming useful is honestly when you just stop being disciplined with it. You stop thinking of yourself as your number one asset, and thus you want to not be in control of this anymore. You just want to give your dollars away to your financial advisor, your 401k people. So you kind of have those early years, then you kind of get to this point of the midlife time of having opportunity capital for when I want to go do these different business adventures, have business financing, get into real estate, tax efficient storage. And then you get to the point of the retirement years. Just last week on Money Mornings, we got deep into tax-free income with retirement. We talked about Aunt Irma. By the way, Russ, have you been getting deep into like Irma? Surcharges and all that stuff like within Medicare. It's so stupid that at 20 years old, I'm kind of getting into this. Like, hey, you got to think long range, right? That's what Nelson teaches us is to think long range. And you, my friend, you were the one back, a few years ago, you did that presentation on the think tank at the NNI about think long range. It was think long range or being a lone ranger on your own island. Remember that one?
Yeah. No, it's funny. You're as you're talking there and you're trying to say, what are some of the uses of where infinite banking no longer becomes useful? Yeah, I actually have one. I was trying to think like, I really want to give someone, when does it actually become not useful? That's a real one, right? Like not just a philosophical one, but an actual one is when you put it in a ILET, an irrevocable life insurance trust. That's exactly when infinite banking becomes useless. Now, for those who don't understand what an irrevocable life insurance trust is, it's a trust that you donate anything into. And specifically for this, it's insurance that you donate insurance into. And people will donate insurance into life insurance, irrevocable life insurance trust, because they want to avoid the state tax, right? Income tax have never been paid on life insurance policies when it's given to the heirs, but there potentially could be estate taxes. So as you start making more money, maybe start developing more assets, these attorneys will come around, right? They get paid to draw up documents. And so one of the most common one they'll do is say, oh, you should take this big, huge death benefit. You got $10 million in death benefit over here. Whenever you die, yes, your heirs are going to get this income tax free, but it's also going to go into your estate, and they may end up having to pay, 40, 50% on X percentage of this. And you don't want that to happen, do you? And somebody says, well, of course I don't want that to happen. And so they say, well, you know how you get around it? We just donate it into this irrevocable life insurance trust. Well, as soon as you do it, irrevocable means you can't undo it. And another key factor is you can't use it anymore. Yeah. So now it just becomes a dead asset in this thing.
Unless, wait, to that point, what about single premium whole life into an ILET?
Well, I'm not saying that you can't put life insurance into an ILET. I'm just saying for the people that come to me and they start thinking about estate taxes, and I'm like, hey, let's apply that that's different. Yeah. But IBC is designed for you to be able to use the money and do things with it. An ILET is designed that you can't touch it. Like if you can touch it and control it, you break all of the powers that exist on there. And so then it would become something that would go into your state. So that is an actual thing that unfortunately I hear people that have made that mistake, or their attorneys are telling them, hey, take all of these IBC policies that you've built up and go put them in an island. I'm like, oh, please don't do that.
Yeah. Yeah. No, and actually I kind of have a few. What about if people cannot control their spending? That's a big one.
Yeah,
Right.
yeah, discipline. You mentioned discipline, and that's an area where if you're going to spend every dollar, if you need every dollar, right? Like I hate the fact that some people, Joey and I got on a kick recently and like went out there to say, hey, if you're trying to put every single dollar you have into a whole life policy, and you immediately need to turn around and have access to 80, 90, 100% of that money to go do something else with, and you're not going to repay it, like there's going to be some issues. You're going to run into a lot of friction points. And we think that that's a bad thing, right? You have to, like we talked about, Nelson said, think long range, right? So if you have to have immediate access to 100% of every dollar you put in there, I'm going to say you need to pull back from the table a little bit and reassess what's going on.
Straight up. Hey, my friend, is there anything that I did not ask you that you do want to leave with the listeners that you think is crucial or important at this time?
I tell you what, my team built a page. You can go to wealthwithoutwallstreet.com/money multiplier. And I'll think through what I didn't get a chance to talk about, which who knows what that is. But also all the things we talked about, all these free resources, the passive income operating system. We built an ebook. I think I mentioned the investor DNA. I'll make sure all of that stuff is in there. And all of this stuff's free, nothing to buy. Would love for you to take it, any value out of that you can, and help you on your journey. I know you're in good hands with Hannah and their team.
Good. And hey, for my YouTube listeners, I do have that posted up on the screen, wealthwithoutwallstreet.com/money multiplier, which you created as our own page. Thank you. So you can go there and you can get in contact with Russ there. Also continue to tune into his podcast show. So I learn more and more as I continue to learn with Russ and Joey and their team over there. I also want to hit on the aspect of I really want y'all to ask yourself these questions. What is the financial problem that I'm trying to solve? And some of y'all might not even think that, hey, Hannah, I don't have a financial problem. My cash flow is doing good. I got cash reserves. I have monies that are coming in passively. I'm doing okay over here. But think long range, think deeper into that future. A big thing that I'm about to talk on, and actually as this launches, we're already going to be talking about it, but at the time of this recording, just this past week with the whole Kyle Busch stuff, we've been following that story very closely with the IULs and Pacific Life. But hey, just this last week, passing away from a severe hospitalization at 41 years old. So you never know when your time is going to be called to go home. Is your family protected for that time? So ask your question, what is the problem I'm trying to solve? Do you value the control over maximum speculation? Where should your capital and your money truly be stored at? And what happens if you need the liquidity tomorrow? So there's always all of these what ifs, right? And that's why I am a big advocate of infinite banking, because it just allows me to have the control over my dollars when I want to have them in whatever I want to use them for. So infinite banking, in my opinion, doesn't stop becoming useful. It's just when people stop understanding it or continue to evolve their education around it. Because I get it, Russ, and you get this too. People are not in this world day in and day out like we are. And they call you back up. And they're like, why am I putting all this money into this stupid life insurance policy? And then you have to like re-educate them all again. You get that too?
Yeah. Well, Nelson devoted a whole chapter to use it or lose it. And it was about that, right? Because if you're not using it, you probably are not understanding its benefits. It's not helping you get closer probably to the things that you wanted anyway. And what a cool thing that you guys meet with your clients every quarter, or at least give them the opportunity. I encourage you to do that with Hannah and the team, because that's going to only continue to help you better understand. We only grasp like 10% of what we hear, right? It's not, I think they say the stat increases up to 85% if you can see it, hear it, and actually repeat it or do something with it. And so what you're giving people an opportunity to do with those quarterly meetings is have an opportunity not only to hear it, but to repeat it and hopefully do something with it, which will only increase their goals, their progress toward goals.
That's it.
Yeah.
Well, thank you, Russ. Thank you, my friend, for joining me today. I'm going to remove you from the stage just real quick, and I'll come right back, okay?
All right. Sounds good.
All right, y'all. Well, hopefully you enjoyed this episode. Hey, putting it back up on the screen too, wealthwithoutwallstreet.com/money multiplier. You can go there, get in contact with Russ, his team. Their wealth of knowledge. I really look up to Russ and Joey and just all that they've been through. I learn from my mentors. I ask, what are the mistakes that you have made? So then I don't make those same mistakes. Being selfish, what does my mentor always tell me? Always appeal to self-interest. But I will be back next week, okay? Leave a comment down below, hit the subscribe button, like the video, support your girl, support the channel. And if you have other topics that you want me to get into, send me an email, podcast@themoneymultiplier.com, and you'll find me just right on there. But do well, be good, my money multiplier friends, and I'll catch you next week. Bye, everyone. If you really enjoyed this episode, you'll really like this one.